Hi, welcome to Understanding and Improving Your Cash Flow. I'm Lisa, and today we also have Kelly. Hi, Kelly.
Hi.
Kelly will actually be presenting most of the webinar, but I will get it started. So this workshop here, or webinar, we were going to offer to our clients as a workshop later in the year. But given what's going on with COVID-19 and in particular the lockdown, we thought it was very appropriate to make some slight changes and deliver it to our clients, or whoever wants to watch it, as a pre-recorded webinar. Really, with what's happening right now, it's so important for business owners to really understand their cash flow, but also where their hidden cash is and what changes they can be making. Right, so what will we be covering today? So we're going to start off with what is a profit and loss, and then what's not included in your profit and loss, because that's very important to understand. Why your profit and loss could have high profit, but cash in your bank is poor, and it's something common we hear a lot of. Also, on to number 4, common issues you might be facing, and then how you can combat those common issues. Number 6, what could I be doing right now through COVID-19 to improve cash flow, and then ending it with showing you small changes that you can make, can make big gains. So I will hand it over to Kelly now.
So hi everyone. Right now we're going to go through where has my cash gone. Does it sound familiar to you? I'm sure it does to many. Have you heard the phrase, I've got great net profit, but I've got no cash in the bank? Not very good. Or are you just worried about cash that's due to the impact of COVID-19, like many of us are? So we're going to talk about where my cash has gone. So first I just want to start with clarifying what a profit and loss report is. And sometimes during this webinar, I'll talk about the profit and loss as a P&L because it's just shorter. So this is obviously a demo, but this is what a profit and loss looks like. It consists of income minus COS, which is cost of sales, less expenses equals our net profit. So maybe when you go to visit your accountant at the end of the year, you'll be familiar with seeing a report that looks like this. Also has some words such as gross profit in it. So just breaking it down, our income is our sales from our business. Our cost of sales are those direct expenses that it's costing us to make those sales. And generally when income goes up, cost of sales go up. When income goes down, cost of sales go down. And then we have, our operating expenses. So these are things that generally takes us to run the business, but not necessarily reflective of if our income goes up or down. So things like bank fees, cleaning, accounting, entertainment, light and heating, motor vehicle, those kind of things that generally happens in a business.
And it's just, sorry, I'm just going to add in there that it's really important that you should really be able to run that profit and loss yourself. Especially if you haven't got your accountant like us running reports and analysing them and then providing you summaries. You should be able to then jump in there at least monthly.
Yeah.
To check out what your net profit is, so you can truly understand how your business is performing.
Yeah, like Lisa said, it's important to run that during the year and not necessarily just wait to the end of the year with your accountant. So great. So what kind of things are not on a profit and loss? Because I just want to go back to, we were talking about where our cash has gone. What's not on this report? So these are things that are drawings, which we all love. They're not included in your profit and loss report. The purchase of fixed assets, so computers, cars, buildings, that kind of thing, is not included in your profit and loss. Nor are our loan repayments. So I'll just do a little disclaimer there. The interest portion of our loan repayments are on the P&L, but not the principal. So for a lot of people, that makes up a big portion. Also, what's not included on our P&L is our tax payments. Those could be personal or company. And the purchase of inventory. So if you run inventory in your business, when you purchase all those goods, they don't show on the P&L yet.
Not until you sell them.
Yeah. So what do you think that the issue could be of where your cash has gone? go back to that statement of where, you know, we've got a great net profit, but no cash in the bank. Oh, I have to keep moving this. So if all of these things here, our drawings, our loan repayments, our tax payments of inventory, and maybe that car, if all of those are higher than our net profit in our P&L, we're actually spending too much money, aren't we, Lisa? Yeah.
That's right. And that P&L we looked at before, it had, I think, that it's $10,000 net profit at the bottom. So just as a really crude way of doing it is look at all of these other things that happened in that month: personal drawings, fixed asset purchases, loan repayments, tax, and all of that. Add those all up and then take that off that net profit. I mean, that's a real simple way of saying, well, am I spending too much or am I not?
So again, just to summarize, some common reasons why there is enough cash in the bank: we're taking too much drawings. Maybe we're overstocking. Maybe we're buying too much and not turning over that stock quick enough. Maybe we've purchased some assets that we couldn't actually afford to buy. Maybe we're not receiving our receivables quick enough. So many of our people are very slow at paying us. Maybe we're taking out a loan that we couldn't afford or no longer can afford because our income's dropped. So we're spending too much money. We've got some slow payers, and maybe potentially we're overstocking. So right now, especially in COVID, it's really important that we understand where our hidden cash is, and these are some really good hidden areas.
Absolutely. And in fact, when clients come to us and say, hey, look, you know, our profit and loss looks fantastic, we've got $200,000 profit, but we've just got no cash in the bank. It's one or many of these reasons why.
Yeah. Great. So now that we know that, we're going to talk about how we can fix that. So ask yourself, how do you manage your drawings? You know, how do you take drawings out of the business? We recommend that you analyze your weekly or fortnightly drawings. We recommend that you have a budget cash flow forecast, because that will let you know what you can afford to take in drawings, you know, regularly. And then you need to stick to your budget. Now, I know that this is a really hard one, but it's really important that if you need cash, you need to stick to your budget. What's a really good idea is to set up a weekly AP to your personal account. So you might be an owner who's not taking wages with PAYE and instead taking drawings. If that's the case, figure out in your budget how much you can afford to take each week, and then set up a weekly AP so it goes into your personal account. So you're not using the business card for all those EFTPOS transactions. Yeah. So don't use your business account for personal spending. It's amazing how it's amazing where all the money can go and you just don't realize it.
That's right. And that's what I say is a lot of is people who are overspending in drawings. It's because they haven't budgeted. They don't have that regular payment coming out, and they just use it as an EFTPOS card. So they have no idea how much they're actually spending at all. Yeah. And when we tell them, they're like, no, our drawings isn't that high.
Yeah. So now, if you're a business that purchases stock and holds it, so I'm talking about the stuff that comes in, sits on the shelf until you sell it, are you potentially overstocking? So how many times should you turn over your stock each year? Do you even know? Should you know? The lower the number is, the longer it is taking you to convert that stock into cash. So we recommend that you purchase in smaller quantities. And obviously in the COVID times, this is a really good idea. Potentially look at buying on consignment. However, we all know that you'll lose some margin on that. But again, you're not having to fork out money for that stock. Maintain the FIFO principle. So first in and first out. Implement the just-in-time disciplines. So order stock as needed. I know a really good example of an electrician who has an agreement with his stockist, and when he needs that stock, he gives them a quick call and then they come out and deliver it. So looking to work with your suppliers on ways to, maybe order stock quickly as you need it and not hold it, on site or in your vans. Your inventory value and turnover trends each month visually is best. So nowadays, we've got a lot of inventory programs out there, which you can run a quick report to see which items are moving quickly, which ones are moving slowly, and keeping track of the stock that you hold. So
definitely a good idea.
Yeah. And with that, analyze what's moving and what's not. Do you want to keep stocking a product that's not moving? Or do you need to do a quick kind of fire sale if it's not moving? This is a really goodie. If you need to purchase stock towards the end of the month, can you hold over until the first of the following month? So most people would have payment terms of 20th of the following. So if you get to the end of March, if you buy it on the 30th, it's going to be due on the 20th of April. So just try and hold off those extra few days. Gets you a bit more leeway.
That's right.
Do you know how many days it's taking your customers to pay you? Are they using you as a bank? We recommend that you invoice out quickly. Once you've delivered a product or service, invoice it out quickly. Don't wait to the end of the month like traditionally people did. If you wait to the end of the month, you're just dragging out that time to get that cash in the bank, aren't you? You could potentially change your payment terms to shorter terms. Traditionally it was 20th of the following month, but we find that a lot more people are moving to 7 or 14-day invoicing. Again, trying to get that cash in the bank a lot quicker. If you use Xero, there's a really great function called invoice reminders. So you can turn that on and it automatically sends an email to your customers the moment that the invoice is overdue. And you get to set the parameters. So it might be 7 days or it might be 3 days. It's just a little bit more automation. So you don't have to remember to call your customers. The system just sends out a friendly reminder. Have some good debtor chasing policies in place that are followed. So I know we've got quite a few really good debtor chasing policies, don't we, Lisa?
Yes, we do. And in fact, I'm still surprised as me how a lot of people are too scared to chase their clients for money. They don't want to upset them. But the reality is that they shouldn't be. Well, most people don't actually get upset. They feel really bad if they are chased. And at the end of the day, they're in the wrong for not paying you. You're not in the wrong for chasing them. And you need to set a precedent with your clients that you don't accept late payers, because if you allow them away with it once, what are they going to do? They're going to do it again and again.
Yeah, and it gets easier.
It does.
The more you do something, the more confident you come across. So definitely, if you're after some really good debtor chasing policies, ask around or ask us. Outsource your debtor chasing to a professional company. We've found that sometimes more traction is taken if it comes from an outside source. So hi, it's Kelly from blah blah. I'm calling on behalf of the client. People get a little bit afraid, don't they? It's a little bit like being sent to Bay Corp. And follow up any invoice queries immediately. So if your client calls you and has a query about an invoice, don't just kind of leave it. Just give them a call and deal with it immediately. So again, trying to speed up that process of trying to get cash into your bank quickly.
Yeah, and certainly if you've got an admin person that is following up invoices and then they pass a query to you, I know that it's probably something you may not want to deal with, especially if they are unhappy with something, but just, rip that band-aid off, give them a call straight away and get it sorted, because it might not be as bad as you think, and you want to get it sorted and get that cash in your bank.
Yeah. And the same goes with that. If you are about to send out an invoice and you think that the customer might be a bit unhappy, just pick up the phone and give them a quick call. Hey, John, I'm about to send out this invoice. It was a bit higher than we talked about. I think they'd really appreciate a little heads up before they get a bill that maybe they weren't expecting.
Or even partway through a job.
Yeah.
There's so many good practices out there. If you've estimated a job and it's gone well over estimation, tell them beforehand, tell them before it goes over estimation. Most people won't mind as long as you communicate it with them.
Definitely. Cool. So one of the other things we can do to make sure cash gets in our bank is to monitor our expenses. So, okay. So, like we did before when we showed the profit and loss, we recommend running a multi-profit and loss report and checking the expenses each month. So I'll just go back a bit and talk about what I mean by that. So it might be that you run a report for March and you compare it to February, January, December, November, kind of go back the last 6 months, and then run your eyes down and just compare each month. So a really good example would be if you saw, or maybe I'll go into it as we keep going. Look for anomalies. Have certain expenses shot up from the last month? Or if you're running across those last 6 months, are there some expenses that are missing 1 month? Investigate if something doesn't look right. So I'll just go back and give an example. So a really good example might be that you're running your eyes down the profit and loss and you're going across the telephone expense line. And it might be that you know that your telephone expenses are around 200 to 300 each month. So if you're going along that line and then all of a sudden it goes up to 900, you need to investigate to see if something doesn't look right. Maybe some coding has been done incorrectly, or maybe someone's bought a phone and you didn't know about it. So have a budget cash flow forecast, because it will let you know what you can afford. And if you are running your profit and loss report to budget, it's going to pull up where you've gone over budget really quickly. Most budget cash flow programs now show up in bright red, don't they, Lisa?
That's right, yeah. Yeah, and I mean, I tell you what, if you had your number one tool for cash flow forecast, for managing cash flow, it is a cash flow forecast, because that will tell you everything you need to know. What drawings can I afford? Can we afford this new loan? Can we afford to take on this new staff member? Can we afford to take on these new assets? So, you know, every time you want to make a change like that, you chuck it in there and say, well, what's my cash flow looking like? You should always be predicting ahead and not just looking at how you're doing right now.
Definitely. I totally agree. I think it's if you're going to, invest in some part of your business, that budget cash flow forecast is the best place. Stick to your budget. As hard as it is, if you're monitoring this every month, then you're going to be more aware of where you're sitting in your expenses to your budget. If income is down, do you need to look at cutting back some expenses? This is really relevant right now, and I'm going to say the COVID times. Maybe you need to cut back some expenses until you can figure out how you get your income back up.
And what's important there, as it says there, but remember, cut the fat, not the muscle. I see people at times cutting actual necessary expenses that they need to keep their business thriving or improving. Marketing's typical. If you cut marketing, then it's going to be even harder to grow your business back up. I mean, you've got to be sensible about it, of course, and think about really what is working and what is not. But just make sure you are just cutting that unnecessary fat and not the muscle, not the stuff that helps your business.
Yeah, no, I'd agree. That's a really good example, the marketing or the advertising in the right places. Great. So I think you're going to take over this section, Lisa.
Yes. So we're now just going to go over some things right now through COVID-19 that you can do to improve your cash flow. So we have mixed it up into two sections, Kelly, if you want to move to the next slide.
Oh, sorry.
Kelly's the control lady today. So we're looking at what we can do regarding the money coming into our business and the money going out. Now, we keep saying over and over again, first step, contact your accountant and get your cash flows updated straight away, which, I think by the 27th of March, we'd contacted all our clients anyway. We went out and contacted them ourselves. But if anyone's watching this, make sure you have talked to your accountant, because I have talked to some other people who weren't even going to bother talking to their accountant. But I think you should. Anyway, so obviously the first step was to apply for the wage subsidy if you managed to fit that criteria, which I think most businesses, to be fair, fit that criteria. So something you could look at doing is look at surplus assets, especially coming out of this lockdown. Do you have any unnecessary assets that you can sell to get some cash into the bank? if you do have inventory, like Kelly touched on before, really analyse that and try and get down your stock as low as possible right now. Right now is really important to not have unnecessary overstocking. And you might want to start looking at running some specials, some out of lockdown specials, because people will be wanting to spend some money coming out of this lockdown. And in fact, they predicted that when we first come out, there will be this huge initial boost of spending, and then they reckon it will die down again. So of course the other thing to do is right now look at your overdue debtors. Okay, get chasing them, get that cash in, and definitely recommend reviewing your terms and how you manage them. A classic one can be if you're doing quoting, if you're quoting jobs up front, do you ask for any money up front? Do you ask for a deposit or anything like that? Because it is actually becoming more and more popular that if someone is quoting, they might be asking for 25% deposit up front, or they might be even asking for all of the money up front before the job is even begun. Of course, now review how can you increase your margins. So what you want to do is increase that gross profit. So drop your cost of sales, but produce the same, or if not more sales. And one way could be looking at alternative suppliers, maybe that have cheaper prices. So there's nothing wrong with looking around at your suppliers as well. And of course, the biggest thing right now is how can you reinvent yourself? You really need to be reevaluating your businesses right now and trying to guesstimate what is going to be the new normal for your industry. How can we sell, create, and deliver our services or products differently? Now, I know that's going to be really hard for some industries, but I think for a lot of industries, it won't be as hard, or you're going to have no choice. Can you diversify? Can you move into other markets? It's about trying to, I know it's a little bit of crystal ball gazing, but unfortunately we're going to have to do a little bit of that right now and try and reinvent our businesses. So now when we talk about money going out of our business, once you've updated your budget, do you need to negotiate wages? You know, especially with right now, a lot of businesses aren't operating. Are you paying 100%? Have you negotiated down to 80%? Or maybe you even need to negotiate right down to the subsidy value. And if you have a budget and cash flow forecast, that will be able to tell you what you can and can't afford. Very, very powerful tool. Of course, review your expenses. You have to be prepared for a drop. Every business needs to be prepared for a drop. Even the ones that might be doing well right now, they may be affected later on. So assume that there will be a drop. So do review those expenses that are unnecessary, that maybe have been a nicety, but you don't really need them for the success of your business. But again, don't cut that muscle. Don't cut the stuff that really does help your business. If you've updated your cash flow, and this is certainly, we've done it for our clients, and it is showing that maybe they are going to be a bit tight, talk to us about options around payment of tax, GST and PAYE, because there are some options around that, isn't there, Kelly?
There is, yeah, and IRD have brought out some remitting of use of money interest and penalties, etc., if you can't pay tax on time. However, you do need to talk to them first. So again, like you said, Lisa, just give your accountant a call to talk through those options first.
That's right. And the next one is review your drawings. Okay, I do find that that is often the biggest culprit when people are overspending. It's because the business can't actually afford the amount of drawings they're taking. So right now, really review your drawings. Think of what can I truly live on, just to get, because it's about your business surviving right now. You know, and everyone has to take a compromise. It's not just the employees, it's not just the businesses. Everyone in some way is going to have to compromise. So review your drawings, maybe do a home budget and think, well, what is a minimum can I take right now? And hopefully you'll be able to, increase them back up, not too far away.
Yeah.
And of course, talk to your bank as a preparation, maybe increase some overdrafts just to get through the next few months. Talk about reducing loans to absolute minimum payment, or maybe you can go on a complete mortgage holiday. And again, this is why having a cash flow is really important, because it can tell you, it'll show you what are the things that we need to do, and then you make those changes and then see how your cash flow looks. So obviously definitely talk to your bank manager as well. So back to Kelly.
Thanks, Lisa. So right now I'm going to go through some small changes that can make big, big gains. So there's a little formula for it. So what do you do when your numbers aren't good? Do we do this?
No.
No, we take some action. That's right, as hard as it may be. Don't bury your head in the sand. Give your accountant a call and just start that process of where to go from here.
Yeah.
Get some professional advice. Can reduce your expenses. When did you last increase your charge out rates or your margins? So starting to think about those things that you can change in your business.
Now, you know, with right now, with COVID, obviously you're not going to be wanting to increase your charge out rates.
No.
You might want to try and increase your margins by reducing supplier costs, but I think right now, but it's something that maybe you can start thinking about, you know, later on, because again, it surprises me with how many businesses, or we get new clients on and I say, hey, when's the last time you increased your prices? And they're like, oh, it was like 4 years ago or 5 years ago. And you ask them why, and they're like, oh, because we don't want to upset our clients. I mean, it's reality. Prices go up, things go up. You know, as long as you're fair and reasonable about it and you're not pricing yourself out of the market, and it matches what you're delivering.
Yeah. So like Lisa said, so take some action, but maybe not right yet is the time to do that. But again, get some advice. So improved performance is generally the result of many small gains rather than huge big breakthroughs. So we don't want to be taking drastic actions or reactions. So what areas do you think improve financial performance? The level of sales, the average price of that sale. I think these would improve financial performance. The cost of the sale, so the cost of the product that is costing us to on-sell. The level of our overheads. So again, we're talking about bank fees, advertising, etc. We've got this 4-5 rule little thing. So how much do you think you need to change all of those 4 areas to make significant improvements? I'm going to go through a bit of if we increase the first 2 by 5%, so the level of sales and the average price of sales. And I just want to mention that the level of sales, the way of increasing them could be things like upselling to existing clients or cross-selling or generating new leads and customers. So not necessarily increasing the physical price of a product.
That's right.
Yeah, and again, you can increase your average price of sale by upselling or cross-selling. It's easier to sell to some existing clients than to new ones, and also reducing our overheads. So if we find ways to increase those 2 green areas, that would be really good. And then if we look at our cost of sales and our overheads, if we can decrease them by just 5%.
5% doesn't sound like a lot, does it?
So again, that's looking at things like talking to your suppliers. No, it doesn't sound like a lot. You know, normally when you talk about decreasing expenses, it's about huge amounts. So I'm just talking about really little. So we'll take you through an example of what that might look like. So what we have is that we're planning to sell 10,000 units at $10. So I've got 100 grand. They cost 10,000 at $7 per unit. So they're costing us 70 grand. So it's making us 30K gross profit. Then we've got our overhead costs of 25,000. So we've got a net profit of $5,000. So by implementing that rule that we just talked about, the goal is to sell 5% more units at a 5% higher price. So we're going to sell 10,500 units. So only 500 units more. And we're going to increase that price by $10.50. So instead of $100,000, we've now got $110,000. So not significant, is it?
No, definitely not.
If we reduce the cost of that unit, so what it's costing us to purchase, by 5%, we've now got the 10,500 units And instead of at $7, we've negotiated with our supplier down to $6.65. Or it may be that you had to switch supplier.
Or maybe,
So,
or actually, sorry, just going to interrupt there. Maybe you also have labour involved in that cost of sale, and maybe you
could do,
become
yeah.
smarter and more lean about how you're making that product. So it could be internal changes as well that's actually reducing those cost of
Yeah,
sales.
becoming more efficient.
Yes, definitely.
Cool. So now we've got, instead of it costing us 70,000, it's 69,825. So again, not significantly reduced. So now, those little small changes, we've got a gross profit instead of 30, we've now got about 40,000. So again, not significant. Now we're going to look at our overheads, excuse me, and reduce them by 5%. Now it's really just a case of looking at your expenses and going, what can I reduce? Can I negotiate better bank fees with my bank? Can I talk to my telephone provider and negotiate a better price, or should I just switch to the competition? The same goes with power. Review your insurance,
Definitely.
and you should be doing that every year, shouldn't you, Lisa?
Yes, that's right.
Yeah. So go down your profit and loss expenses and go, what can I cut? Is my entertainment bill too high? Should we just cut back, especially for the next 6 months at least? So looking at each of those and reducing them. So instead of 25,000, we've got them down to 23,000. So we've just shaved off a couple of thousand. Now what we have is we've got, instead of a profit of 5,000, we've got 16,500. So I didn't expect that when we were looking through this. That's a significant jump. When we're talking about, when we break down all these little lines, they're little changes.
That's right.
So it's a 233% improvement in pre-tax profit. That's great. And if we go back to our profit and loss report, we want that bottom line, or the net profit, to be high enough to pay for everything that's not on that profit and loss report.
That's right.
And if you remember, those are things like tax, purchase of inventory, purchase of fixed assets, drawings, that kind of thing. So that is a really good, just quick example. And it may not pan out that way in reality, but if you just look at each segment of your business and negotiate pricing or change the way that you sell, that's quite achievable.
Just going back to the inventory. So the inventory sits on your balance sheet until you sell it. So once you sell it, then it comes down to your profit and loss. So if you've got $100,000 of inventory sitting on your balance sheet that you haven't sold yet, that's $100,000 of your cash that's just sitting on your shelf. So when you can visualize it like that, and really make sure that if you are stocking a lot of inventory, know that inventory well, what's moving well, what's not moving well.
Yeah. Cool. So where to from here? So we've covered some strategies on where our cash has gone and how to fix it. I recommend that we just take a few minutes to write down what you will action when you leave here. So kind of making an action plan, because it's all very well to watch these webinars, but the next is to actually action what you need to do from here to make those changes.
That's right. And one of the reasons why we wanted to do as a pre-recorded webinar opposed to as a live one, so you can actually pause it and make some notes as you go along, and also watch it in your own time, because it is a lot to take in. Yeah.
Cool. So I think, Lisa, you're going to talk about some funding.
Yeah, so there's some free funding that's available to business owners that are affected by COVID-19. So the government has actually brought out a new scheme where you can get one-on-one sessions in the areas of HR, cash flow forecasting, and business continuity. There's actually some other areas. I think there's some wellbeing areas as well if you are interested in that. But I am recommending clients or any business to take advantage of that, especially if you haven't done any kind of cash flow forecasting before. Then I would definitely be getting some help in those areas. So we've already got clients utilising this funding, and we're working with them already, or even people who were not our clients before. And so we're helping them in those 3 different areas. So with regards to business continuity, it's reviewing your business and helping you figure out how you can operate in with what's going on. How can you keep operating? How can you survive? And looking at different ways that you can be working, diversifying, ensuring your business survival, looking at being more cloud operated, and then down to cash flow forecasting, providing the good, the bad, and the ugly cash flow projections, so you really know potentially how bad it could be and what changes you need to make for your business to survive. And then, of course, HR. So we're helping people already with regards to the wage subsidy and how to manage that. But, hopefully you don't get to the stage of needing to look at restructuring. But unfortunately, if you do, or just want some conversations around it and what it means, then that's something that we can help with as well. So the other 3 areas. Now, if you are interested in that funding, then you can give me a call, or you can email me at lisa@sass.nz, or call my DDI, which is 9284277, and then we can get the ball rolling and I can give you the information on how to get that funding. But it's fantastic that the government is doing this for businesses.
That's really good.
So yeah, we come to an end now, don't we, Kelly?
We do. Nice and quick.
So thank you very much for attending a Sass Not workshop webinar, pre-recorded webinar. I hope you've enjoyed it and learnt something. And of course, give us a call if you do need help. We are here working 100% from home.
Absolutely. Thank
Wonderful.
you.
Thank you.
Thanks.